Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Friday, October 21st, 6:57 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Okay, taking a quick look at futures. We're down about between 0.5% and about 0.8% on the NASDAQ. Nat gas is down 4%. I don't know if you've been reading in on the news flow, but Europe is off to a mild winter, which I would imagine is very welcome from the citizenry and the politicians. But the result of that is they've been able to fill up their storage facilities for nat gas. And of course, when everybody was panicking in the August-September timeframe, we and other countries sent an armada of LNG tankers to Europe to help them alleviate the natural gas shortage created by the Russian pipeline closures. But now the storage facilities are full, and you've got basically the equivalent of a Long Beach situation with tankers piling up on the seas with nowhere to put their LNG delivery. So whenever you get a disruption like that, the spot price is going to crumble. So what you're seeing right now is the spot price falling, but further dated contracts for nat gas holding pretty firm because the longer term dynamics haven't changed. There's a big energy crunch in Europe with Russia and all that stuff we just talked about. But short term, where do you put the stuff? And it may take a while for that bubble on the seas to play out as the winter temperatures eventually begin to drop. So that's that. We've got October OPEX today. Make sure you run through all your holdings and decide if you've got anything expiring today. To take care of it. You don't want to get any surprise assignments or anything like that tomorrow morning. So make sure you go through your holdings very carefully. Over on the earnings front, we've got Verizon, American Express, Schlumberger, HCA in the healthcare space, and Regions Financial. Those are the big ones that I saw for today. So let's dive into our charts. I want to start off with something, chart I haven't shown in a long time, and this is the dollar yen. We've been showing the rising dollar chart almost every day as a way to keep our finger on the pulse of overall market liquidity. And this is how the strong dollar is manifesting itself in Japan. And you can see that the dollar yen is doing a moonshot. Now keep in mind, a higher dollar yen means the yen is collapsing. The value of the yen is collapsing because it's on, it's in the denominator of the dollar yen cross. So a higher dollar yen means the yen itself for the Japanese people is being severely devalued, and this morning we're through 150, and you got to go all the way back to 1990 to find a location on the chart that was higher. So this thing is out of control. And part of the reason for that is the rate differential between Japan and the United States. You know that we just talked about it yesterday, that U.S. rates across the curve are well above 4%, while in Japan, the Bank of Japan, the Central Bank of Japan, has been under a yield control regime where they're holding Japanese government bonds at less than 0.5%. So if you were holders of Japanese yen and you could get 4% in the States versus less than 0.5% in your own sovereign bonds, what would you do? You'd sell those yen and buy U.S. Treasuries or some other instrument denominated in dollars. And that's what's been happening. But unfortunately, if you're some poor soul in, living in Japan and you need to buy energy or buy some kind of imported product, you're only buying a third as much, right? Because it went from 100 to 150. So now what used to take, X amount, now you got to go X plus 50%. And that's just crushing. So it's always a shell game, right? You can't have it both ways. You can't have low interest rates and a strong currency. If you hold the interest rates low, then the currency runs wild. If you hold the currency strong, then the interest rates run wild. So, that's kind of what we have here. We have a strong dollar, which is nominally good, but we've also got inflation that's running wild, and now we've got an interest rate response from the central bankers. And you may notice this Gartman line. If you remember, he used to be a guy, market pundit, and he used to talk about when he traded the yen back in the day, at 260. And back in the 80s, you can see yen was way up here. And then they basically what was happening was the strong dollar worldwide was a wrecking ball for emerging markets and things that we're talking about today as the dollar grinds higher. But back then it was even stronger. And then they did this thing called the Plaza Accord, where all the central banks basically agreed that the dollar had to come down. And then that was the result of that was this strengthening of the yen, and then it traded in this big range for the last 30 years. But we're getting ready to pop out of that range, so something to watch. Didn't mean to take so much time on that detour, but everything is connected together in the world in some way, shape, or fashion, and I think it's important to kind of know, even if you're not trading it, what's going on. One thing we are involved in is TLT, and you can see that this thing is just falling apart. Down almost 2% yesterday. Let's see if I can find that chart on the weekly. We broke this line, this support line at 98. So now, the door is open for, remember yesterday we talked about on the yield side, the door is open for a flash move to 5%. And remember, the FOMC meets the first week of November, where they're probably going to turn the screws another 0.75%. So that door now is very definitely open on the downside for TLT. And notice that our big bear flag measured move on the weekly is definitely, I won't say looking good, but playing true to form. This is out of the textbooks so far, so we'll have to see where it goes. VIX, I mean, surprisingly, was down a little bit yesterday. We closed under 30, but this morning equities are down, so this may just pop right up. So keep the big three on your matrix. That being the dollar, TLT, and the VIX, and those will help you if you're trying to navigate intraday what's going on. And if you got if you catch a day with a weak dollar, a strong TLT, and the VIX falling, then you might have something cooking. Nothing cooking on Bitcoin other than getting ready for what I think is going to be a huge move. Oil had a good beginning to the day yesterday. Ended up flat. We're still right here on our chart here. We went up, tagged, came down, got support. So now we're right here in the middle with a little pivot point around 85. Nothing useful on the oscillators, right? Literally, we're at the zero line, so really hard to use the oscillators to give us any kind of directional bias. As we move on to SPY, we got to hold this June low right down here, and more or less I call that 362.50. If you break that, then you open that door back to these lows. And remember, we had that spike low last week that we recovered from. But now if this whole thing rolls over and we fall back below the daily downtrend line and support, that would not be good, technically speaking. Here we are with some finer resolution on the 60-minute hourly chart. You can see we had a nice morning yesterday where we went up into this 372.5 region, but then we had a whole lineup of Fed speakers yesterday. I think that started at maybe just a little bit before noon, and one after the other. I mean, 4 of them right in a row. We're talking, hawkish talk the whole time. We got to keep policy going. We expect to keep raising into 2023. Inflation's out of control. We're committed to stamping it out. That playbook, and the market did not like that at all. So we came up. We lost our central pivot at 370, which is not good. And now we've actually moved inside this 60-minute downtrend channel that we had. So taken together, you could say things better turn around fast, or this little excursion here looks like a fake breakout. And then what could happen, of course, is you get a move down, you lose this June low, and you fill this gap. Now you're back down to the you fill this gap, and then you're down to these lows here at 357.50. So I try not to use the phrase "we're at a really important spot in the market" because it seems like it's that way a lot of the time. But I still think 370 is this, the central pivot because of this value range, and now we're squarely back in the range, and then your technical target becomes the low end of the range. So when we got a gap to fill there, so be aware of that. I was thinking we could get a squeeze into OPEX, but it doesn't seem to be happening. Same idea here on the Qs. we closed below the central pivot, at 269, and now we're down again. Here's that June low. In my mind, you got to recapture 270, or odds really favor the downside. And you can see here, I haven't extended the 60-minute downtrend channel, but you can see we've got a gap here to fill. You can see we made 2 runs at filling the overhead gap, and yesterday it turned right on a dime, right at 275 on that touch of the lower line of the gap, and just rejected against that. And you'll see as we go through these charts this morning, how well the levels that we had really worked. Now, as far as trading, I got this part, but I didn't get this part. I got long early and got that run up to there. I was really fortunate. I just, when it started to waver, I closed it out, but I didn't get short. And of course, I wish I would have. It would have been a good, round trip. That doesn't look like much, but that's $5 up and $5 back down. Even if you capture, $8 of that, you've had a good day. At least I didn't give it all back, right? I got out near the top, so that was good. IWM in better technical shape than the other two. Why? Because your June lows are still, they're close, but they're still relatively far away compared to SPY and QQQ. So we're right here, but we're still below what I consider that central pivot at 170. And now the door, as long as we stay below, the door is open to those prior lows down at 163. And you can see here that little baby uptrend channel came right up to this 173, right at the midpoint of this trading range, and failed right there. So you had an opportunity to buy 170 on the way up, and you got to the midpoint where it stalled and then let go. So now we find ourselves in the middle of this gap, and chances are we fill that this morning. And so this morning, depending on how things go, 167 comes into focus because the gap will have been filled and will be at the midpoint of this prior $6 range. And if 167 were to fail and we have, one of those bad Friday sell-offs, not a prediction, just a possibility. If we have one of those bad Friday sell-offs and 167 breaks, then your target becomes all of these lows down here at 164. We talked about Meta, came right up to the top of the downtrend channel. We talked about that downtrend channel and possibly 138 acting as resistance, and sure enough it did. Came right back up to these prior highs right at the top of the downtrend channel and was rejected there. Now you can see the levels down here, 131 being a level of support, but then you've got the gap down here from 130 down to about 127 and a half at these lows, and you certainly want to hold that if you're looking for a bounce or a hold in Meta. It's got to do it right here at these lows, or else the bottom's going to fall out. Here again, the lines worked great. We had this high volume over price bar on Apple. Rejection, came right up to the same level and the downtrend line and rejected there right on a dime. Again, that was a decent technical trade. You had a chance to buy right down here about 142.50, right on the open, and you got a move up to 145.50. $3 isn't going to make you rich, but it's a nice trade. And if you were sharp enough to turn short here, you made another 3. So, I mean, that's tactical trading. Now, it's all about holding 142.50. Why? Prior trading range and an open gap below. So, if you're an Apple bull, you don't want to see 142.50 fail. Otherwise, the door's open for a down move. And if you catch something where, you lose that level from above, then that's your short to go down. And then the next, your technical target would be the bottom of the box at 138 with a midpoint around 140. Tesla tried to fill the gap coming in from 205, got up into that 215 area, but then it failed and then rolled back down, stayed within the downtrend channel. I think you've got a level right here at these prior lows, 207.50. I would key off of that as your pivot. If we get some kind of recovery or a rally, you can be long against 207.50 and hope for this gap fill. Otherwise, break below 207.50 and you got the midpoint. And we showed the weekly chart yesterday. You really got to hold 200. That's an important closing level on this Friday afternoon. Weekly charts close at 4 o'clock. So you break 200, then you open the door down to, these 180, 185 type levels. Microsoft, another one where the lines worked perfectly. You had a chance to buy at 235 on the open. You got to move to 242, 242.50 right here at where all these lines rejected here, came up for a touch at the bottom of the gap and then failed. So now we simply reset to where we were yesterday. 235's got to hold, or you got a big gap to fill down to 227.50. And, so that 235 does remain a key pivot for Microsoft. And if things get squirrely and you get a chance to, if you sense it's a bearish day, key off 235 because that is a big gap to fill, like $7.50. And you can do really well on that on a Friday afternoon if you can get that move. Same kind of price action on Amazon. Had a chance to buy on the open at these lows or buying a breakout above 115. That's what I did. I didn't get it here. I got it at 115. Got up to 118 where it rejected. And that's about where I got off. I did not get short and ride it back down. But again, we find ourselves at the 115 pivot. I think that thinking still holds. You get a break below 115. You got 114 to worry about, but then you're coming down to the bottom of this trading range. And if you lose 112, then, well, you got all this to consider. A move down to the top of the open gap, and then down to the prior lows at 107. Same kind of action on Google right here at the top of the box at 100. I think your levels below are 98.75, and then you got a big gap to fill down to 96.5 at the bottom of this trading range. So yeah, I mean, we just been chopping within these trading ranges for the last however many number of days. while the market decides what to do. Netflix, we got our bracket trade in place. And you can see how well yesterday, again, this shows the power of these setups. We talked about being long above 270 as a way to play it. You got to move right up to the top of the bracket for another test. See all these tests, these wicks, right up to the top, and then right back to the pivot within the bracket, the halfway point between more or less 280 and 260, right in here at the 270 mark. Now, if you weren't active inside the bracket and you've traded or you set your alarms here at the top and here at the bottom, those alarms didn't fire yesterday, right? Because you didn't have a breakout or a breakdown. Those alarms remain in place. And, you know, if the world falls apart and you get an alarm down here at the bottom that price breaks, that's your short entry. If people get it together and there's a bull run and you get an alarm on the top side, then you get long and see how far it can go within the gap. So because this bracket is so wide, some people will want to trade inside it. But if you're somebody that just wants to take the move out of the box, then you have your alarms set at those locations. So nice example of how the bracket contained that price action yesterday and may for a long time, right? Before an equilibrium is established and then either buyers or sellers take control of price. Another great example of support and resistance here on semis. We had support here at 185. We had our $10 wide trading range. Came up for a try, rejected, 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 and now yesterday came right up to the same spot and rejected. Another illustration of the power of knowing your support and resistance levels. If and when price ever gets above 185, that of course would be your buy because you're back in the trading range. But here, because you had so many rejections, at 185, price had to prove it, right? Whenever price has shown that to have a problem at a certain level, then price has to prove it at that level before you take action, or you decide to yourself, that's an objective short, and if price can prove me wrong on a breakout, then that's trading. I get stopped out and then I get long. So another good example of knowing these levels and then making objective decisions around those levels in your active trading. Now, as we move on to ARK, not a lot going on. I mean, it's at an important spot, but there wasn't a lot of movement yesterday, 0.5%. I still think 1575 or 1475 is your central pivot. You get, you know, if the world falls apart here, you got yourself a good short. But right now, I don't think you can front run that because you're above support, right? And as long as that holds, you can be long with a stop just below. Little different setup for ARKG because we're below the central pivot at 3150 and we're down here at the midpoint. If ARK decides to have a bad day today and loses the midpoint, then that opens up these prior lows as we've been discussing down at 28. Same idea here with ARK-K. Lost the 36 pivot. Now these prior lows are in focus, and the bulls got to get it back above 36 to keep things from falling apart. ARKW had another reach back in that early morning trade back up to 46, but then dropped down. Managed to put in a green day, but as long as it's below 46, I think the bears are in control. Wanted to show you Hess, one of those other integrated names, had a good morning but then fell back. But what I wanted to show you is, it has broken out above this cup and handle formation, and as long as it holds, let's say 127.50, I think Hess will remain in good shape. And as we said, ConocoPhillips, here's Exxon. Popped out the other day above 103. Kind of had a doji day, so we're going to have to see. Doji just simply means indecision. Really didn't do much. 14 cents. I'm still long that 103s for next Friday, October 28th, which is when they report earnings. So I still like these integrated names. I still like the refiners with the crack spread either stable at very high levels or actually expanding with diesel prices driving higher, with diesel inventories being way below 5-year averages and heading into winter where there's not a lot in storage, and we haven't had a real big cold snap yet. But if it's a cold winter, that's going to really put a lot of pressure on diesel, which will make the prices go up and further fatten those crack spreads that we've been talking about. Okay, let's see how we close out the week. Let's see how we close out OPEX. I think there is one Fed speaker today. I'm not sure who it is. I think it might have been Barkin. I'm not sure. But Fed's not showing any signs of letting up, not even in the rhetoric. Rates continue to press higher. And as long as those rates are pressing higher, turning the screws on liquidity and by extension equities, it's going to be tough, and we got to have those prior lows in focus for another breakdown. Snap, the Snap, what do they call it? Social media name Snap, snapped like a rotten twig last night. Big gap down. So if you're a gap trader, you can look at that. CSX Railroad went the other direction. So the last time I looked, it was up 3 or 4% off of last night's earnings announcement. So if you're into gap trading, those are a couple that you can look at this morning. That's about all I got. Hope you wrap up the week strong. And if I see anything exciting, I'll send it to you midday. But lately, it's just been a lot of chop and nothing. I don't feel real confident, except on energy and the refiners, of swinging long duration. And although the fundamentals are bearish, that is, rising dollar, rising rates, etc. I think everybody and their brother knows that. And as long as we hold above the prior lows, I don't like shorting when everybody's short and calling for doomsday. So yeah, if we break the next level, we can take a few shorts. or mess around with ARC. I think you're going to get some horsepower there on a breakdown, but taking a lot of big swings on the short side, I don't like that strategy right now. So I've been pretty quiet on swing trades and been trying to pick off intraday moves when they happen. Hasn't been easy, been real choppy. So anyways, hope you have a good day of trading. And this has been Chris Buss with Traders Profit Compass. Talk to you next time.